This is going to blow your mind. Demand for AI computing is now growing at 2 times the rate of Moore's law. There is simply not enough supply to meet the insane demand right now. So forget the concerns about an AI bubble. The bubble is only just getting started, and there's a massive bottleneck right now. And that's creating a massive opportunity for investors if you're paying attention. Now, from GPU makers to energy producers to data centers, there is a modern gold rush going on. A whole new ecosystem is forming, and the smart money is racing to get in right now. So in this video, I want to talk about exactly how AI is scaling, which sectors are exploding, and how you can position yourself to ride this wave before everyone else, of course, catches on. And I know there's been some big moves already, so I understand that, but there's still going to be big moves to come if this is accurate. But let's take it back a little bit. What in the world is Moore's Law? Well, Moore's Law is the model created by Intel co-founder Gordon Moore that predicted computing power would double roughly every 2 years at the same time as costs fell. For decades, chip makers relied on this rule, that computing power would grow exponentially as engineers basically packed a lot more transistors and the tiny on-off switches into the same chips. And chip technologies, of course, exploded, right? For the past 50 years, this has remained accurate. In 1971, the first Intel chip had 2,300 transistors. By 2020, modern CPUs have billions of transistors. But since ChatGPT launched in 2022, AI has absolutely ripped up the rulebook because AI isn't just scaling. It's having a full-on hockey stick moment. It's exploding. The chip makers, they can't solve this problem alone. That's because modern AI models require massive parallel processing. Training large language models like ChatGPT or image generators like Midjourney require exponential amounts of data, exponential amounts of energy, which also means exponential amounts of minerals. That's a scale that Moore's Law never envisioned. The hockey stick moment of AI. Now, we've hit physical limits of how small we can make chip components right now. The chips themselves aren't really the bottleneck. The real bottleneck now is power, cooling, and infrastructure. Some saying that America needs to literally double its energy capacity in the next 5 years in order to keep up with everything. Data centers are the backbone of AI, and building them isn't instant. It takes years. Nuclear power plants, renewable energy, hyperscale data centers, takes planning, it takes building, it takes approvals and permits and getting online and all this BS. Even if NVIDIA could suddenly double its chip production tomorrow, those GPUs might just sit there without enough power or cooling to run them. AI demand simply cannot keep up with supply anymore, of energy in particular. To meet today's AI demand, analysts estimate $500 billion. This is insane. $500 billion must be invested in data centers every year until 2030 just to keep up. That's infrastructure on a scale the world has never seen before. It's probably going to create a massive economic boom. We've officially entered the post-Moore's Law era. Things are changing. Progress is no longer about making chips smaller and faster. It's about designing smarter architectures. It's about building massive, and I mean massive, energy networks. We're talking about literally doubling the global capacity for energy generation, okay? This is nuts. Scaling data centers is gonna be critical because if they wanna handle AI's never-ending demand, they're gonna have to get better, they're gonna need to be bigger, more of them, and with more energy, okay? And with more minerals to make all this stuff. And it's now this level of scarcity that's going to drive up certain stock prices for the foreseeable future. Now, NVIDIA certainly has dominated the headlines in the past 5 years. The stock's gone absolutely bonkers. It's probably getting a bit overbought, to be honest. But chip makers have been the obvious play the last few years. But that opportunity isn't alone anymore. The winners of this AI boom from here on won't just be the chip makers. They'll be the companies controlling the infrastructure and the energy powering the revolution. And for investors, that's where the opportunity probably is coming next. So where is the smart money actually going? What are they actually buying? What should you as an investor maybe be paying attention to? What am I paying attention to as an investor? We're going to talk about that in just a second. Guys, if you're trading the cryptocurrency markets, you want a good place to trade Bitcoin, Ethereum, Solana, any of the big coins, that place is called BitUnix. That's an exchange I've been trading on a lot, doing a lot of my trading over there. And if you want to join me, it's never been a better time. No KYC, no VPN, available to anyone, anywhere. That's you. Deep liquidity, great security, and if you sign up now using this link right down here, you're gonna get some insane deposit bonuses. Deposit $2,000, you're gonna get $400 back. Deposit $10,000, you're gonna get $700 back. Crazy trading bonuses, and every day for the rest of the month of October, we're giving away $1,000 every single live stream. If you want to be one of those winners, you gotta be signed up. There's a link right down here. Go get it. So where's the smart money going? Look, AI isn't just about tech stocks anymore because it's literally reshaping the global economy and creating some of the biggest investment opportunities of a generation. AI now accounts for around 40% of all the S&P 500's capital expenditures. That means nearly half of corporate tech spending is being funneled into servers, GPUs, data centers, and literally even making their own effing nuclear reactors and stuff like that. Jeff Bezos has called this kind of a good kind of bubble. Speaking at Italian Tech Week a couple weeks ago, he compared AI to the fiber optic build-out of the 1990s and biotech frenzies before it. Sure, some bets are going to fail. Some data center companies will fail dramatically. Some things will fail to be built. Sure. But Bezos argues the AI boom will leave behind critical infrastructure that changes the world as we know it. Big words. That's exactly what we're seeing with GPUs, hyperscale data centers, and new energy projects. They are building the foundation of tomorrow's digital economy. Forward-looking PE ratios also tell a very interesting story. You see, unlike the dot-com bubble, many AI-driven companies, well, they're actually getting cheaper even as their stock prices rise. Earnings are catching up to valuations. Unlike the dot-com bubble where you had complete vaporware companies, you actually have now companies where the earnings are incredibly robust and they're keeping pace with the increased valuations of the companies. This isn't speculation just for the sake of hype. And yes, there's some speculation. Yes, there's some hype. Yes, there's some froth. I get that. But this is industrial, infrastructure-driven growth. So, where am I as an investor focusing right now? Look, the AI boom isn't just about flashy apps or chatbots. That's what the average person sees. The real opportunity lies in the tools and infrastructure powering AI. So there are three main areas to focus on: data centers and AI infrastructure stocks. These are the backbone of AI. Companies that, own massive data centers and can provide AI cloud services. These are positioned to do very well in this boom. NVIDIA, Microsoft, BlackRock, they actually just announced a joint effort to buy aligned data centers for $40 billion. Google, Meta, CoreWeave, and Blackstone are also investing heavily into AI infrastructure and into data centers. But here's the unexpected winner: Bitcoin miners. It's actually been super interesting. Maybe you've seen it, maybe you've not. Some Bitcoin miners are expanding into AI. Okay, companies like Irene Energy, Cypher, TeraWulf, they're now using GPU cloud capacity and repurposing mining facilities for AI workloads. They already built themselves next to cheap energy sources. They have the infrastructure, they have the warehouses, they have the cooling facilities. They mine Bitcoin too, but now they're also selling GPU compute power. Bernstein, for example, named Irene Energy as their top Bitcoin mining stock for AI infrastructure due to its multi-year AI cloud contract with NVIDIA and its expansion plans. Even CleanSpark is expected to follow suit. Now, to be fair, both these stocks have pumped massively. I'm not saying run out and buy these right now. You can put them on a watch list. I haven't bought either of these ones yet, but I'm watching, okay? These miners turned AI providers are a hidden way to play the AI boom. The second, GPU and semiconductor leaders. Look, every AI model runs on GPUs. So owning the hardware makers, of course, is an interesting play. NVIDIA dominates this space with AI optimized GPUs, while AMD and TSMC power the chips that run massive AI workloads. So maybe AMD, for example, is a more undervalued bet by comparison. Number three, energy stocks. AI needs electricity, like shit tons of it. This is why energy is a critical play. Nuclear, natural gas, and renewables are all being repriced as essential infrastructure. Even Donald Trump has publicly highlighted the need for nuclear energy to support AI demand. Companies like Constellation Energy, BWX Technologies, uranium producers like Camco are all set to benefit from AI's constant need for more power. By the way, I own a couple of those stocks. You can see my portfolio disclosures, as always, in the link down below here on YouTube. Anyway, I'm positioning myself for this future, and I'm going to continue doing that with profits coming out of crypto, moving them into the stock world, okay? I see it as investing in the foundation of the AI revolution, which is going to completely reshape the way the world works, and it's still relatively early on. Yeah, it's not perfectly early. Could have bought more of these stocks back in 2022, sure, but it's still early enough. Where a lot of these companies are likely to go is much higher. Not to say there won't be disgusting corrections along the way and big bumps and all that kind of stuff. There always is. It's markets, man. That's how it works. Also, shout out to rare earth metals companies, because all these GPUs and shit, man, we're going to need a lot more rare earths. All these batteries, all these robots and stuff that are coming. It's also an interesting play. Anyway, that's it for this video. I'll see you back in the next one. Peace.